The IPO market has been somewhat hit and miss in 2023. Despite some high-profile listings, things haven't gone exactly according to plan for some of the larger companies that went public. Arm and Instacart are two in particular that had disappointing debuts in September. The latter seeing a big plunge on just the second day of trading that wiped out almost all of its IPO gains.
Oh, and the big clog maker out there, Birkenstock, was another big name listing this year. Only just traded above its IPO price recently. The recent market bounce has seen a host of new contenders step into the fore, with the likes of Shion gearing up for what some are calling a mega IPO in the next coming months. Here, our next guest says hope abounds for 2024. Joining us now, we've got Christine Short, Wall Street Horizon VP of Research. Christine, great to have you here in studio with us. Help us really get a kind of gaze here on what is expected within the IPO market, and even as we've seen some of the lulls over the course of this year, what's expected to be the catalyst, and if there's one sector that really kind of leads us.
Yeah, so like you said, we came into the summer, and I think we wrote about it. A lot of people wrote about it after Kava, after Savers Value Village, and it was like, this is the resurgence. We're coming in the second half of the year. This is where we're going to see IPO activity reignite. That didn't really materialize, right, with a few of the names that you talked about. Not only did those names not do particularly well, but we didn't see this kind of uptick in activity. In Q4 right now, we've only seen about 52 IPO announcements. That's the lowest Q4 in over 7 years. So what's the catalyst going forward? Well, this summer, a lot of those IPOs didn't do well because of uncharacteristic volatility, as well as higher interest rates, right? We know risky assets don't do well in a high interest rate market. But if you look at the CME Group's FedWatch tool, there are some anticipation that we're going to see quite a few cuts in the first half of the year. I think that gives private companies kind of the gusto they need to go forward and potentially debut when maybe they just were too shy at the end of this year.
Christine, there's been lots of focus on whether or not we could see Shein go public next year, whether or not Reddit could also potentially be in the mix. What do you see just in terms of how likely it is that some of those larger companies, one that we have been waiting for now to go public for quite some time, that they're actually going to jump in? Skims as well.
Yeah, Skims is another one. I think that all depends on what we see out of jobs on Friday, because that will determine probably what the Fed, the language that they give. Are they going to be a little more dovish finally if jobs numbers come in weaker than expected? All of this, I really think, depends on interest rates in the first half of the year. Like I said, FedWatch tool expecting about 3 cuts until the June meeting. And so I think that, again, would give those companies kind of the reassurance to go in. Look, it's been a challenging environment for IPOs this year, right? Like tighter capital markets, like I said, volatility, higher interest rates. So no one's really quite been ready to jump in, especially those consumer names and those tech names. Those are the ones that we've particularly seen get hit. And I would actually say Birkenstock is one that's doing a little bit better than the rest, right? A few of these are head scratchers. Savers Value Village, when that came out, everyone's like, great environment for them.
Right, this is what we're hanging our hat on.
Right, like, oh, second-hand clothing's making pretty big comeback.
Yeah.
The consumer is very value focused right now. They're going to do great, but they're down like 33% since their debut. So that one, as well as Kava, right? Like one consumer area that has been doing well is dining, is restaurants, but when you see Kava perform as it has, it makes maybe someone like a Panera, who has been rumored to re-IPO, right? They used to be public. They got taken private in 2017. They're rumored for 2024, but they're probably looking very closely at Kava's performance right now.
As you kind of look across the board, what is the general kind of balance sheet health for some of these companies that have been sitting on the sidelines waiting for the right time to enter into the public markets right now?
Yeah, I mean, I really just think they're again looking at interest rates. They're looking at what peers in the space are doing. Here's another one that I think has actually done better than expected. Or ARM Holdings. We were actually expecting them to do much better, but they're slowly creeping out of that, right? Like they're only down, I think, 2.5% from their debut. What are they looking at? Well, the industry as a whole, the semiconductors have been doing incredibly well. If you look at some of the partnerships on the horizon there, NVIDIA, AMD, so that sets them up to do quite well going forward. So I think they're just looking at the overall market for IPO debuts. Again, investors sort of shy away in these high interest rate markets. Also, we talked a little bit about some of the IPO lockup expiration dates that are coming up for those June debuts from Kava, Savers Value Village, Kodiak Gas. You also had Fidelis Insurance. Those are coming up, and investors need to be aware of those because it puts them at risk, right? If insiders can now go ahead and sell 6 months after, Does the market get flooded with shares? Does the stock price go down? So we're going to be watching some of those names next week.
Christine, in terms of the sector activity, because I'm taking a look at this chart that has the last 12 months, you have technology, healthcare, industrials, consumer discretionary even, among the sectors that we saw the most activity in over the last year. What do you think is likely to lead next year? Is it going to be some of those consumer discretionary, maybe retail names?
Yeah, I think retail's not a bad one. I mean, tech's just been doing so well, especially those mega tech names have served really as a safe haven. We call 2023 was sort of the year of uncertainty. Obviously was a good year for markets, but you could see investors were sort of uncertain where to put their money. Volume was low many months. Volatility, all of this showed us that investors were like, in wait and see mode, and that's why you saw the Magnificent Seven do well. It's like, oh, I'll just plunk my money in those. Those are like likely to do quite well. And in this environment, sure, IPO debuts haven't done as well, but I think you see tech. Think you see certain areas of consumer discretionary lead next year.
And you still have a few of the tech giants, if you will, in the generative AI space that are still privately traded, even though, or private companies at the end of the day, even though they've gotten billions of dollars in the case of OpenAI, that has been thrust their way from some of the large equity market players. You've got a company in Hugging Face that is very generative AI focused. Is there a broader theme within artificial intelligence that you expect perhaps to also kind of take on some of the attention when we think about companies that could start talking about going public next year?
Yeah, I mean, they don't necessarily have to, depending on what phase they're in, right? Like they're doing well enough, they're getting the funding, and they're probably looking at what peers in the space, what NVIDIA, what Microsoft, what other names are doing. So of course that's going to be a focus again for 2024, and so we're certainly looking at AI as well.
Christine Short, Wall Street Horizon VP of Research, joining us here on set. Thanks so much for taking the time today.
Thanks so much.
We're all going to be watching closely. Big IPOs next year, big IPO energy, hopefully.